Good afternoon. This is Brian Split with Allendale on Friday, December 3rd, 2010 with your closing commentary for the week. We did have a strong day today. A lot of macroeconomic buying really started early this morning with a break in the U.S. dollar off of news that our U.S. unemployment rate has jumped from 9.6% to 9.8% with only modest growth in non-farm payrolls. So that did send the dollar quite a bit lower, and really the market was well supported throughout the session. The March corn contract up 18 cents today at 573.5, actually making some new highs for the session into the close, so very strong close to finish the week. That was up 20.5 cents on the week. The December 11 contract up 11.5 today at 534.5, and that was up 27.5 on the week. On the soybean side, January up 20.5 today at $13.25. That was up 61 3/4 for the week. November 11 beans up a dime at 12.07 today, and that was up 48.5 for the week. On the wheat has been the strongest grain for this week. Most of the bullish fundamental stories surrounding wheat. March contract was up 30.5 today at 779. That is up 91 3/4 cents for the week. The July Chicago contract was up 11 3/4 at 786 3/4, and that is up 62 1/4 on the week. Again, most of the firm trade coming from the strong dollar. As far as bullish fundamental news, we continue to hear stories of too much rain in Australia, and even heard some rhetoric today that suggested that as much as 90% of the Australian wheat crop could be at risk of being reduced to feed quality. So that is keeping prices very well supported, and we have had some very solid fresh exports here with Egypt and Japan buying wheat, and also some sales of corn this week that were notable. So with recent purchases, that is going to continue to keep this market well supported, and I believe that we are still watching Argentina as far as weather for the soybeans at this point. But if some of these rains don't materialize going towards the back end of this month into the new year, the trade will most likely start talking about possibility of corn yield being reduced because of that dryness. So that's also something we'll want to watch there. On the cattle market today, we did end mixed. We had December down 10, Feb up 10. There was some light profit taking today because of the unemployment data. That would suggest that maybe some of this demand domestically for steak may not be there if we continue to see unemployment go in the wrong direction. But there is a cautious approach to this. This chart still does look pretty friendly. We have the dollar down, which if we're not going to see demand here because of unemployment, a weak dollar will keep our export demand firm. And we are at some pretty high levels here, so a little bit of light profit taking not hurting. And we're going to really keep an eye out for a possible deal with South Korea that could possibly include most beef there. So on the hogs, we did finish higher today. A lot of long December and short February spreading accounting for a lot of the volume in the action today. Market seems to be waiting for some more cash market news, and we did have the February contract up 57. As far as the outside markets, again, the dollar being the major driver here, we did have the stock market. Looks like it's still down about 25 points in the Dow right now. About 2.5 in the S&P, and we were down quite a bit more than that when the unemployment data did come out, but the stock market has recovered and has been very strong this week. So this chart looks friendly, and we're approaching the recent highs, and in some cases, depending on which indice you're watching, we have made new highs for this move. It looks like the dollar down 90 as we speak. Crude oil settled $1.19 higher today. That's right back up to the highs we had early in November. And if you haven't seen the unleaded gas or the RBOB contract, that chart looks extremely friendly, taking out the November highs and currently trading about 12 cents above the November highs. So that chart does look bullish at this point. And we've got some supportive fundamental news behind that as well. Gold up about 20 bucks, currently settled about $17 higher. Cotton was up limit today. That's the third consecutive session. 4-cent limit on Wednesday, 5-cent limit yesterday, and a 6-cent limit today. And That December contract is already in first notice, so we do not have limits, but had that contract, I believe, trade as much as maybe 12 cents, 12 to 13 cents higher today. So still seeing some very aggressive buying in that market as well. But big picture here, it looks like as long as this dollar is trading below some of the recent support and below the uptrend, the 20-day moving average may be the next target to take out next week, and that was the low today. If we see that happen early next week, more likely the commodities will see a friendly start to the week as well. We got to keep an eye out over the weekend for any kind of news out of Europe, anything out of that region as far as concerns about the sovereign debt crisis could cause some profit taking after this nice run that we've had, so we'll watch out for that. But if you have any questions, please give us a call. Again, I'd encourage you to take a look at our conference January 21st and 22nd to see if you can make it out for that. And again, our phone number here is 1-800-2-MARKET. That's 1-800-262-7538. And you can also look us up online at www.allendale-inc.com. And good luck trading it next week. Thank you.